What's up, everybody? Welcome to Trading with Easy and the Oracle. It is the recap video for Wednesday, June 10th, 2026. And some of the things I want to talk about in this video is looking at one indicator and putting a little trust in it, and that is the Fibonacci. Fibonacci, we've been using it for a while, but I talked about it yesterday in a video, and I want to talk about it again in this video, because the Fibonacci is an awesome tool to use to give you some sort of guidance. So let's talk about the market for a second. The market right now is going down. And when we look at the Asia and London session, we had a good trend down. We had core CPI news that came out, okay, at 7:30 Central Time. And what that did was that pushed the market up. Okay, so core CPI came up and pushed the market up. But what's so crazy about when CPI came out, because I was up and I kind of looked at it a little bit. This is going to be the news candle. It wasn't that big. It was just a regular, kind of upward trend. I watched it go up. And then as soon as it went up, it kind of wicked down and it consolidated until almost the market opened. And then when the market opened, we had an upward trend, a downward trend, and then the 835 candle came in and it shot up a little bit. And then the 840 going into the orb, which I have the orb laid out right here, from here to here, which the orb was pretty big. We had more of consolidation. Now, what we did was, when the 9 o'clock candle came in right here, it was right underneath the orb, and we looked at how it was trending up. So about 9:05, we decided, about 9:05 to 9:10, we had decided to take the trade because we saw the upward trend. It broke the orb, it started trending up. And our target, looking at the Fibonacci from the previous daily candle, was right at about 61.8. And I'm stressing about the Fibonacci. And the reason why is because when we go to the daily chart, and we do this every day. What we did was we put the Fibonacci on the previous daily chart. And my plan of thought is, if this market is going to be on an upward trend, it has to break out of the 61.8. If it breaks to 61.8, then we'll be on looking for a long scenario, right? Going up. Even though we took longs, but since we looked at that it doesn't want to break the 61.8, that was our target. So when we was doing the trade, we looked at it, okay, cool. We wanted to get in the trade. We got in the trade. And what it did was it scared us a little bit. That's why we took we got out the trade, because it double topped up here. So it double topped and it started trending down. And once it started trending down, we went on and took our win and got out the trade. But when we noticed it went underneath the orb, then it started trending back up. We got right back in the trade right at the orb. And once it went up, we rode it all the way to the top. Our take profit was at the 61.8. And as you can see, right at the 61.8, what did the market do? So the 50, between the 50% and the 61.8 is the golden zone of the Fibonacci. And so our take profit was right at the 61.8. And what did the market do? It wicked over the 61.8 to grab liquidity. And then the next 15-minute candle came in and it started flushing. And when you're looking at the smaller time frame, the price action was a mess. I mean, it really was a mess. And one of the biggest things that we stress, and one of the biggest things we talk about, is going on the higher time frame. If you look at the 5-minute time frame here, the 5-minute time frame is a mess. This would have tricked you out your trade right here. But going from the 5-minute to maybe the 30-minute, as you can see, is a nice clean upward trend. Or maybe looking at the 1 hour, at the 9 o'clock. Now, don't get me wrong, the 9 o'clock did turn red. And this is one of the reasons why we got out at the 61.8, because it trickled down past the orb and it started going the downward trend. But we was already out the trade. But what I'm saying is, when you're looking at the lower time frames, the lower time frames will always trick you out the trade. Look at this price action on the 1 minute. It is a mess. Now, we traded this. We was in this trade, but what we decided to do was, once we got in the trade, we said, well, we're going to put our take profit at the 61.8 of the Fibonacci. And when we started seeing this price action look so bad, we didn't want to get out the trade on the second trade that we took. So what we decided to do, go on a higher time frame. Once you go on the higher time frame, it looks much cleaner. As you can see, 2 candles going up. And as the 2 candles going up, we traded it from inside the orb all the way up to the 61.8. And we got our trade in this area right here. Now, we got 2 boxes here. One of the boxes was the consolidation. Even though we traded this, we felt confident that the market was going to go up to the 61.8. And this is one of the reasons why we took the trade. We saw consolidation in this area. We saw upward trend. We took the trade right at the orb, and we trended up to the 61.8, and then we took profit right at the 61.8. Now, once it hit the 61.8, the 9 o'clock candle went into a deep dive. It went from a green candle all the way down to a red candle, and everything else is history. As of me recording this video, we are now in a 15-minute consolidation. And so, yeah, right now, I think the market is pretty much consolidated pretty much throughout the day. Now, I'm not gonna lie to you. This was bad price action today. It was not that great. Now, yes, if you look at the higher time frame, you could have traded the 61.8 short all the way down here to maybe underneath the orb, or maybe trade from the 61.8 to the orb and take profit right here. Again, the way we trade, we're looking for a piece of the pie. We're not looking for a whole trend up and trend down. NASDAQ in this era does not give you that sometimes. Now, yes, you do have those days where you do get very good, clean price action up to or down or whatever. But one of the things that we looked at is Friday's daily candle. You got to keep this in mind right here. Friday's daily candle is very important. And the reason why is because we are in the middle of Friday's daily candle. We are still ranging in Friday's daily candle. Now, yes, yesterday it broke Friday's daily candle out, but it squeezed back in Friday's daily candle. And today, as it right now is going down, look like we will breach and do a continuation down from Friday's daily candle. So look like today we may have a close outside of the Friday's daily candle all the way to the downside. Now, as you can see, we are now at a downward trend. And I talked about this a lot. If you take your Fibonacci, okay, and you go all the way to the start of the trend from the bottom here all the way to the top, okay, and let me squeeze that in a little bit. If you look at this, and I want you to look at this because the Fibonacci will tell you something all the way at the top. Right there at the 23.6 is exactly where we hovering at for the past couple of days, okay? From Friday to Monday to Tuesday to Wednesday. We've been hovering around the 23.6. Now, I believe that, I don't think that we're going to go to the 38.2 yet, because, I mean, that's a long way down. I think for today, I think we're going to stay within the realm of the 23.6. Now, I believe that we may close the week out maybe in the 38.2, coming down close to the 50% Fibonacci. And then what we have to think about, and this is what I'm thinking about, since we doing a pullback, I think this is a Fibonacci retracement coming from the higher time frame. Once we get into this golden zone right here between the 50 and the 61.8, I'm looking to see that this market may trend back up. Now, if we break the 61.8 on this downward trend here in the market, I believe that we're going to keep coming down to all the way down here to the 100% of the Fibonacci. But right now, we right at the 23.6. We've been hovering around the 23.6, and that's where we've been at when it comes down to the Fibonacci. If you look at that, right, if you market fib from the bottom of the trend all the way to the top of the trend and look where it's at, it's right here at the 23.6 of the Fibonacci. And so what we doing is the way we trading the Fibonacci on the previous daily candle. And we know that if this is going to be an upward trend, it's got to break the 61.8, which it did not. So that was our take profit. We took our take profit right here, and we got out the trade for a nice profit, and we are good to go. Again, we took two trades. We took two winning trades. We looked at the price action on a smaller time frame, and we decided to go on to take profit right then and there. But we noticed that price action was still going up, and we dealt with the consolidation. We dealt with the horrible price action, and the reason why is because of the higher time frame. All right. So overall, it was not a clean trade, right? I mean, look, when you look at this, it was a mess, right? It was a mess. Even though we had a trend going up, price action was a mess going to that level. But once the trend broke and we changed structure and we started coming down here. Now, I would tell you that the 10 o'clock candle came in right here, and we put a box here. For anybody that's trade beyond what we trade in, because we only trade the 9 o'clock candle, you had a good opportunity, a fantastic opportunity to take shorts right here at the top, take shorts all the way down past the orb right here, and maybe take profit right at the bottom, or close to the bottom over here at London. Okay, and that's going to be Asia lows down there. It's going to be Asia lows down there. So you look like you could have took a trade close to Asia lows. Now, I would highly recommend that if you would take trades like this, or you take trades like that, right, you don't want to be exactly at the zone. You want to give yourself a little leeway. And the reason why, if you look at that, right, it looked like it almost touched, but it didn't touch, and it consolidated. Then the next candle came down and it almost touched, but it didn't touch. So I would highly recommend, if you do set your take profit, you want to set it a little above the zone, just to give it a little more room, by the chance it doesn't exactly hit the zone, but it made this come close to the zone. And then, as you can see, it went back up. And right now, as of me recording this, maybe 15 minutes before 12 p.m., the market is going into full consolidation. So you had two opportunities in this market. You had an upward trend, hit the 61.8, then you had a downward trend, hitting close to London low, Asia lows down here, and then now you in a strict consolidation. And this is the 5-minute chart here. And even if you go to the 15-minute chart and look at that, it's this bad price action. You got long wick, small bodies, a doji candle, a long red candle, green candles. I mean, this is nasty. You get wicked the hell out of this stuff right here. You will lose your ass off in these type of trades right here. So trust me, take it from me. We've took trades like this and we've lost blue accounts and all kinds of different elements of this type of price action right here. If you want to see us trade live, make sure you subscribe and hit that notification bell, because we trade live every day. This is Eric. See you guys on the next video. Peace.